The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the March 20th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's go start the day off by taking a look at what I consider to be a great belief system out here. And I say this, folks, live life fully, especially while we're here. Experience everything. Take care of yourselves and take care of your friends. Have fun. Be crazy. Be weird. Go out and screw up. You're going to anyways, so you might as well enjoy the process. Take the opportunity, I say, to learn from your mistakes. Find the cause of your problem. Spend 5 minutes, I say, doing that. 95% on the solution, and eliminate those problems. Don't try to be perfect. Just be an extraordinary example of being a great human being, as each of you are out there. Let's go take a look at these markets. Actually, before we do that, because you want to talk about great human beings, tomorrow evening from 6:30 to 8 o'clock, one of God's gifts to this planet here, to our universe, is Bud Rawls. He's going to be doing a workshop, The Coming 4 Years in the Market. It's from 6:30 to 8 p.m. All the details on the homepage of TFN.com. You do not want to miss this. This is like your once-in-a-lifetime opportunity. You know, when those meteors, they fly by the Earth and we don't really get a chance to see it. Well, you don't want that meteor. This was one that you can stop and see and catch, and you can watch it over and over again on your members page. Even if you can't be there live, you'll be able to get the taped version of it. You'll be able to learn and educate yourself. And so that is really what it's all about. Live life to your fullest, and attending Bud Rawls' workshop tomorrow is going to be one of those ways to do that. Again, all the details on the homepage of TFNN.com. Let's go take a look at these markets. Right now, we got the Dow trading up 70 points, up about 0.5%, trading out at 14,526. It has so far peaked over its little Mount Everest out here. That was the high that came in on March the 15th, 14,539.14. Got up to a level of 14,544.06. So it has taken out those highs, traveling now back below those highs, just a tad, out at 14,527 out there. If you're watching us on Tiger TV, you can see the 1.618 butterfly. We're still inside that range. That's the butterfly pattern, or the expansion pattern, coming off of that October 5th high out there. That was 13,661.87, all the way down to the low that was put in here on November the 16th, and that was out at the 12,471 level. So it's made an expansion just a tad beyond that, but not really too bad out there. So right now, it's peaked up over that high from the March 15th level, trading back below. Question is, folks, is that the top? Is that the top that is in here, at least for a while, as the market pulls back? Not really any bearish candles out here. You'd have to really blend 2 days together, and yesterday was nothing more than a doji, a high wave candle, really more so than a doji. And a high wave candle, the interpretation there just simply means it has lost its way. Kind of interesting that it would lose its way up towards the top here, but that's in fact what it's done. That is on the Dow. It's our first area of support on any pullback, and of course we need to see this thing close below that blue line, that little black squiggly line on my screen. That's that Johnny Cash, Basil Chapman walking the 9 EMA. That 9 EMA right now being a price point of 14,440. So that'd be quite a reversal today. Don't know that you'll get it today, but it is interesting to note out there. At 13, you're seeing a 13. That is a Thomas DeMark TD combo out there, and that typically identifies tops or bottoms. And if you get above that, just like it did right back here on the January 29 time frame. That's the last time we saw another TD 913 combo count out there. Once the market got above that, that was your clue that the trend was still your friend and the trend was going to continue on. So until the highs get taken out here of March the 15th, or today's highs, I should say, you need to be careful in the marketplace. That's just my interpretation of the charts. Let's go take a look at the transports, because the transports have been transporting price to the moon out here. And today you've got FedEx that were out with numbers. FedEx is sending more than a warning shot that the something is slowing down out there. And right now we can see that blue walk of fame. Right now that is what the transports are trading down into. So maybe the transports that would give you a little signal out here. Right now the trannies are trading out at 295. No real bearish candles out here. In fact, really the transports on a day like today with the Dow peaking out, the transports here had the opportunity. No longer really. Well, I suppose they could. It would take a big reversal out here. But if you do, I'll blow this up on my screen. If you're just listening in on Tiger TV or the radio, thanks so much for doing that. Remember, you can always catch this show streaming live to your smartphone devices. Just go to the homepage of TFNN.com after you've signed up for Bud's Workshop. Then go over, and on the right-hand side, you'll see that little button with 3 smartphones out there. Click on that. You'll get this show streaming live to you. You can also get the archive of this on Channel 10. And if we take a look at the candle here that I'm referring to is the March 14th candle inside the transports. We had 3 little bodied candles out here. Those 3 little bodied candles, they really set up the possibility of a continuation pattern out here. And right now the transports are not participating in that continuation pattern. All you needed here was the actual price to move above 62.81.29. Hey, if it did it today, that would be your continuation pattern to the upside. That would be referred to as a rising 3 candle formation out here. So far, right now, what the transports are doing is just tagging and testing that 9-period EMA. On the trannies, that's at the price point of 6,261. They actually are the low so far, 6,200.85, but we want to pay attention to the transports. We don't often go take a look at the transports, but we can do anything we want on this show. You can even give us a call at 877-927-6648. You can be a co-host for a while. We can take a look at something you'd like to look at. On the screen here, what I've got is I've got the S&P 500. S&P 500 itself has shown some bearish weakness out here, candle-wise. And what I've got, that red squiggly line out here on my chart is the U.S. dollar index. In fact, let me make sure that it is. Let me just look at it real quickly. Yeah, it is the U.S. dollar index, and it is it's inverted. And that means it's inverted there in order to be able to, typically what we see is we see the dollar moving up and the market moving down. So by inverting it, it allows us to see that directional correlation. It's not intended to identify a price move or anything, but we can see that that really has completely come unglued here with regard to a price move since, it first started coming unglued all the way back here. You'll see the yellow box that's highlighted on my screen back in the 1st of February or 4th of February, really has come unhitched and unglued again in the middle of February out there, February 26th. So no real correlation, and that means, no reason to pay attention to, no reason to correlate what the U.S. dollar index is doing to the S&P 500. On the commodity sector, that's a whole different story out there. On the S&Ps, though, right now, just trying to get into, they're into the swing point high. Let's see, was a swing point high on the 15th as well? 1563.62 it was. So trading inside there, you'd get a close below 1555.74 would be a rejection of that swing point. We'll go take a look at the volume. Yesterday we had the SPYs expanding with volume to the downside, so it'll be important to be paying attention to what the SPYs are doing today volume-wise. Right now, though, you've got the SPYs, or the S&P, at 1557.97. The number to write down on your pad of paper, 1555.74. You close inside that, sets up a run at least to the 1563.62 level. That's on your S&P 500. Let's go take a look at the Russell 2000. Let's see what that is doing. Russell 2000 right now trading out at 949.14. Russell 2000, having a pretty decent move here. Russell 2000, that Basel Walk of Fame, 9-period EMA, that held a price yesterday. It got below it, peaked below it, and coming in during the last maybe 6 minutes of the trading session, went ahead and closed right back up above that. Of course, it gave up its possibility of a continuation pattern. Actually, totally gave up that possibility. Right now today, trading out 949.13 out there. It has not made its way back into the swing point high, that March 15th level. The low is 949.48 so far intraday. 949.49. Looks like that's where that wants to try to run to. Let's go take a look at the composite, see what we've got going on inside the composite today. The composite trading back inside that March 15th level. That level is all the way from a low of 32.42 up to 32.60. Trading right now at 32.51 out there. So gapping up this morning. And when I say gapping up, probably should come up with a different term for that, because what I'm really referring to is not a gap in price, but a gap from where it closed yesterday. The close on the composite here was at 32.29 and opened this morning up at 32.51 out there. Let's go take a look at the NDX 100, see what the NDX is doing out here. The NDX trading out at 28.05. The NDX has been the weak link out here, still dealing with that .786 Gartley sell pattern. So that is still in place, even with a little bounce in Apple. I guess it's bouncing to the downside now, up down $2.80, but it was moving up over the last several trading sessions. I still think Apple wants to move higher, but the NDX is certainly struggling out here. The NDX, dealing with that .786. It's got resistance here, should have resistance, which is this most recent bearish engulfing, which happened to be the March 15th level. So as the markets were making higher highs, being the S&P, the composite, the Dow, and maybe even was the transports as well, you had the NDX actually have a bearish signal. You had a bearish candle out there. That sets up the resistance really being at the highs of about 28.12. So far today, intraday, it's been up to 28.11.48 out there. So no big deal yet. The key is, and I say, so the real keys are probably watching. Of course, there's several keys that I've given you, but certainly you want to pay attention to the NDX, because if it ever does break above this, that will buoy the market, and you'll see that breakout, quite frankly, take off inside the Dow. But so far, that is not the case out there. So what have we missed? What have we missed out here in taking a look at what's going on in the marketplace? Let's go take a look at the SOX. Let's go see what the semiconductor index is doing. Not a lot out here. The semiconductor index yesterday coming down and testing the second level of support. That was the gap that was created on March the 4th. That level held. Semiconductors are weak out here. Had some decent reversal signals, most certainly off of the March 15th level. Again, March 15th, when the markets were making highs, you had the semiconductors. The markets aren't really going to move higher without the semis, and the NDX moving lower out there. So might want to make you say, something to think about. 877-927-6648. Right now we've got Goldilocks. Gold is trading down $3 out here. Silver is off 3. Over in Europe right now, you've got the DAX up 57. The FTSE is up 5. And light sweet crude here, really forming a big bearish engulfing candle yesterday. We'll go peek in on light sweet crude. Right now it's trading up 37 cents out at 92.53. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Dow's up 78 right now. S&P's up 9. Trading out at 1557. And let's go peek in on light sweet crude, see what she is doing here. You know, light sweet crude made a 0.786 retracement off of the lows. The lows I'm referring to coming back into the December 11th price point. Let's go take a look at our retracement ruler out here. Let's take a look at the low. That was $87.04 out there, all the way up to the high put in on February 13th. Out at 98.65. Does really a perfect 0.786 retracement out there. You then have a little bull sash candle that shows up on March the 6th. That's your reversal signal. You then had a bullish engulfing candle that showed up on March the 7th out there. Now, what's interesting here, if you take a look at the candle formations, you had a little hanging man candle right here on March the 18th. Now, that is referred to as a bearish candle signal. However, it's probably one of the weaker bearish signals that are out there, because if you take a look at that, it's not a hammer candle. Now, it looks like a hammer, it smells like a hammer, but hammers can only come during the downtrend, and in this case here, we can see the price was moving up. That's why they call it the, I don't know, I don't remember why they call it the hanging man out there, but they do. It is a bearish reversal sign, but I don't consider it to be a bearish reversal signal. A whole different animal out there. Why? Well, if you take a look at it, you take a look at that candle, you tell me who's still in control of price on the trading session of March the 18th. no way I can get my head wrapped around that is a reversal signal. A reversal sign? Yeah, okay, I can buy into it because of just understanding the candle patterns that are out there. In this case here, the black line going across my screen, we're looking at a daily chart. That's your 200-day exponential moving average. It had broken just slightly above that, and now back down below that. And when it broke down below that, yesterday was a bearish engulfing, bear sash candle, however you want to take a look at it. But it engulfed both the session. It engulfed the session from the 18th, from the 15th, from the 14th, from the 13th as well. So it supersized. When it went to the meal to order its whatever. My apologies because I can't remember last time I drove through a fast food window, but supersize it is what it was doing out there. Now as we take a look at today's candle, no bullishness here in today's candle at all. Looks like light sweet crude may in fact want to begin pulling back. Now if we take a look at where could it pull back to, really what it would do, this is a straight line move. If we take a look at off of the lows here from March 4th all the way up to the highs put in yesterday, let's take a look at the retracement levels. And the 0.618 would take you almost back to the swing point from March the 4th out there. That swing point high was 90.91. The actual 0.618 is $91.15. So I would say somewhere in the range of 90.35 to 91.15 to 90.91, somewhere in that range out there. A nice pullback on some lighter volume. What that would actually be doing is setting up the B to a C leg of an A to B equals C to up. Now what's interesting here, because I can go ahead and plot these ahead of time, so let's go ahead and do this. Let's do two things. Because what we can do here is let's take a look at the retracement off of the highs now. So we're going to take a look at the retracement off of February the 13th high all the way down to the low. So you're going to see some numbers up on my screen. You're going to see 95.09 would be the 0.618 retracement. Hasn't made it up there. 96.66 is the 0.786 level. Let's just assume that this does nothing more than a normal retracement, which would be come back to the 618 level. We'll test the 618 and the 786. So we're going to go from our swing point low. You would do this really on any chart. We just happen to have light sweet crude, and I don't know, I got in the mood to do this. So we're going to go from the low to the high out here on March 19th. Now we're going to pull this back to the 618 level. At 618, as you can see, what's set up on my screen here, 1-to-1 A to B equals CD, takes you up to 95.92. If this pulls back and retraces all the way back into the 0.786 level, what that will set up is a 1-to-1 A to B equals CD. That's going to take you right into the actual price point projection is like 95.07, 95.09. 95.09 is the 618 retracement off of that larger move down. That, folks, is what sets up a Gartley sell pattern. Now, you need to have all the candle signals in place, but you know what it is that you would actually be looking for here. And somehow I just lost, there we go, and lost it on my screen. So we won't know till we see what that retracement looks like. But you've got here, I think that the way that I'm taking a look at this pattern, at least at the present time here, is nice little pullback into 90, ideally $90.35 to $91.15, and then a bullish candle. That would signal that now wants to make that C to D move, and that is on light sweet crude. But that's just the way that it looks right now. You got to take these things one moment at a time. As long as we're inside looking at commodities and so forth, let's go and take a look at Goldilocks and silver. Looks like we're going to have to do that when we get back from the break. Right now, you've got gold trading out at $16.09, but volume yesterday, I like it. I like it a lot. 176,000 contracts. Really, quite frankly, going into its last swing point that had 164,000 contracts. Long and strong on gold. 877-927-6640.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Dow's up 80 points right now. Composite up 21. S&P's up almost 10. Out at 15, trading at 15.57 out there. Let's go back to take a look at gold and silver out here. Gold right now trading out at 1608.40. I suppose there's a demand for euros most certainly because they need to stock those banks because there's going to be a run on those banks. God, can you try to put yourself in the shoes of the folks over in Cyprus. Just the yous and me's out there that, whether their money's not invested in the market or what have you, it's just sitting there in the, in the bank. You think that it's safe or what have you, and you can't even access it to pay your grocery bills. Most of us these days, are speaking on behalf of myself, I don't carry as much cash around with me as I used to. I do have some cash tucked away, certainly for a rainy day out there, but most of us just simply rely on our card. So much easier, convenient. In fact, really the big move out here, figure maybe 5 years from now or less, the guys that make the what's it called, Square, and the other competitors out there, so that you can be able to use your phone to take care of commerce out there, as well as use your phone. I wonder how that's actually working inside the Starbucks stores. Not being a coffee drinker, I don't venture into a Starbucks too often, but I believe you're able to. They've got that device or system set up so that you can walk in there. The system knows that it's actually, you that you're in there, and you don't even have to take your hands out of your pocket in order to go ahead and execute the trade out, the sale out there. Well, just think about all those folks now that haven't been able to access their cash over the weekend. It's now Wednesday. It's now Wednesday evening over there, and they still haven't figured out. The amazing thing is they still haven't figured out how to solve those problems other than by going over to Russia and playing a little game of Russian roulette. Do you want to talk about, it's being downplayed. I think it's being downplayed here in the United States, but it's hard to see this thing ending well. And, yeah, you got the euro actually bouncing a bit. We'll go peek in on the bounce, but if there's a demand for euros, it's in order to be able to restock those banks and restock those machines because they're, I take my cash out of there. Look, I remember Tom and I specifically back when we ran into the problems in 2008 with regard to cash reserves that you had inside banks. And at that stage it was $100,000. At least for me, I was spending that time and when the worries really picked up and opening up new accounts, at different banks just to make sure that I wasn't having to worry out there. And I'm sure there's a lot of folks like you also that did that as well. So I think that we'll see a demand here for gold as well. I would think that we might see a demand for gold. But, of course, the large commercials in the marketplace, these are the large ships out there. They have been for a period now of weeks, last several weeks, have been taking their largest net short position in gold out there. So they saw something taking place ahead of time. This is before gold got down and tested its lows out there. So I'm thinking that the large banks, they knew what likely was coming down the pipe, and the easiest way to prepare for it, I mean, to me it makes all logical sense now. The easiest way to prepare for that was to start taking long positions inside gold. So gold yesterday, as we take a look at the stock chart, taking on the swing point high, its most recent swing point high, period swing point high, February 26th, and that had 164,000 contracts. The top of that was 1619.70, and what gold did yesterday, it closed just below it. It stopped just below that level, got up to 1615 versus 1619.70. So, they can do that in a heartbeat, and is coming into that swing point with volume, 176 million shares. So it looks to me like gold is just simply setting up to take a run. It wants to travel up to 1647, probably 1704 at least. But gold putting in a pretty decent bottom here. Not so the case with silver, but it kind of makes me wonder if you were over in well, I'd want to be a gold and silver dealer over in Cyprus right now because, of course, you'd have to say that you want the euros, but you probably could make a pretty decent profit because you could charge a pretty decent premium selling gold and silver over there because, I can see folks over there actually wanting to buy, junk silver or silver ounces or what have you. And so what these guys have done, guys and gals, quite frankly. What's her name? Christine Lagarde out there. I don't often talk about individuals. I don't like to say anything bad about people, but and so therefore I make a practice of really not doing it. But as a group, you got to say, you got to be kidding me. That was your best shot across the bow, what they came up with? Oh, my God. Anyways, we take a look at silver out here. Silver not really doing not the same setup that gold has, but what silver does have, quite frankly, what I like, it's got that .786 Gartley buy pattern. It has not been violated. Had, quite frankly, from a trade setup, from a long setup, an actual better signal than gold did as silver tried punching and testing through the swing point that set up that .786 Gartley. That's February 20th, 75,000 contracts. And moved down with 47,000 contracts on March the 1st out there. That was one of the reasons I went long a silver equity out there. And so, but I think taking a long trade in silver here, even though it's been very flat, these small-bodied candles out here, to me, that's more troublesome, not from a bullish standpoint, but, it's unusual. This is unusual behavior. Certainly we live in unusual times. But having small-bodied candles like this, you got to go back a long ways in the silver chart to really find this many small-bodied candles. We're talking from March the 1st. It's already March the 20th out here, and just all a series of small-bodied candles out there. There's something wrong there. That is not the way that markets work. So at least in the commodities section out here. So that's my spiel. I don't really do spiels too often here, but every now and then you got to put up with it. Now let's go take a look at the King, see what the U.S. dollar index is doing today, creating a bearish engulfing candle. Of course, we have one on the weekly basis. It's setting up. Now, what the U.S. dollar index really seems to be doing here is doing nothing more than working off its overbought condition. And it's doing a pretty good job. Got really seriously overbought back in the end of February 26th to be exact. And it's been moved higher on lighter relative strength, and now it's just really kind of been working that condition off, and can continue to work it off a bit more here. But I have a sense here that what we're going to see is we'll see this U.S. dollar index, this 0.786 Gartley pattern. I have a sense that we're going to see it actually fail, and you know what that sets up? That sets up when a Gartley pattern fails, that turns into a butterfly pattern. And that exact number here, if we take a look at what that would be here, we can go figure that number out here real quick. I just need to scrunch. Don't know if scrunch is a actual word out there. It is in my vocabulary. So as I scrunch this down, you can see that 85.78, if this 0.786 Gartley sell pattern here fails, you'll see the U.S. dollar index move up to 85.78. But it'll take gold and most likely silver along with it because what they have done over in Europe, unforgivable, absolutely unforgivable, no matter what. Early on, I guess I'm continuing to kind of digress here a bit, but early on, one of the first things I learned when I got out of college, I'm by trade, I'm a bean counter, but I've done so many more things. I'm an entrepreneurial bean counter. I think the best kind of all. But one of the first things that I learned as I became a controller for a publicly held company was don't mess with people's payroll. I learned that lesson. I learned it the hard way. But sometimes we have to learn lessons the hard way and the easy way. And I learned that, and boy, it was a great lesson because I've taught it to everybody, and I've made sure of it, and I've always made sure that people got paid when they were supposed to get paid out there. That's one of your responsibilities as an entrepreneur, as a business owner. And I would have to say, from a countrywide perspective, I don't mean countrywide, the company, it should be their first responsibility, and they've just absolutely blown it out there. So, in any event, I got to get off that soapbox subject. Let's go to get off. I'm not going to really get off it too much if I go take a look at the currencies, but I don't really have a choice here. We got to go take a look at the currency market. We're going to take a look at the euro. The euro has held its support level, which is the December 7th swing point. That low, 128. Well, it gave way yesterday, quite frankly. And then it closed out the session just slightly above it. 128,758 is the number. You can see right now you've got the euro here. It's been bouncing around between support and resistance for these last three trading sessions. The euro will make a move lower, 126,785, more likely 123,982 at this stage, which is the 0.786 retracement of its move off of the lows here back in July of 2012 up to the highs in February. One of the charts here, I'll switch over to it. It's amazing to me how this actually works. It is amazing, but this is one you want to write down. I'm going to put up the weekly chart here of the euro U.S. dollar currency pair, and I'm going to go ahead and pull it back, and then I'll go a little bit forward. But if you take a look at these boxes out here, all these boxes that I have, right now I've just got this chart here going back to 2002. That was just simply when I started. These boxes here represent the time periods of the end of the calendar year and beginning of the next year. And each of these boxes, with the exception here of this time frame in December of 2002, I don't know why or what happened here, but each of these box areas, they mark significant changes in trends. Now, I knew this. I shared this with clients a long time ago, and you can see, so this is back in the 2004 time frame. Here's 2005. Here's 2008. and 6 out here. Take a look at how there's a change in trend inside the euro towards the end and beginning of the year out here, and it has worked like clockwork. You might say going back to 2002, so 12 of them. Examples don't make up a great sample size out here. Well, take a look at this one. This one was actually really a beauty because it made a .786 Gartley sell pattern right coming into the January time frame. So, again, towards the beginning of the year, and we certainly are seeing that change in trend. And a normal Gartley, just the normal move on the Gartley sell pattern is going to take you to the 618 level. That's 126,785 and takes you back to the set of swing points from November of 2012. And that, on the longer-term basis, is where the, I don't know about longer-term, at least on the intermediate-term basis, is where the euro is headed to. Let's go take a look at let's go take a look at the pound. Let's go take a look at the Great British Pound out here. Let's go see, that's having a nice move. As you know, we are long the Great British Pound, and it just has paused here for a couple of trading sessions. It's now moving higher. It is going to run into that old, what used to be old support, now will be new resistance out here. And the price point that you got to start putting on that seatbelt sign is going to be 152.67. I would actually, since we know those are clouds out there, I'd put that seatbelt sign on just a tad earlier. 152.67 out there inside the Great British Pound U.S. dollar. Let's go take a look at some of these stocks here that are popping and dropping. Let's go take a look at a tale of two worlds out here. Let's take a look at the first tale. That's going to be the dog. That's going to be the back end of the tail, and that is on BioLinerex. Don't know if I pronounced it correctly. BLRX is the ticker symbol. And this thing here is totally getting smoked. BLRX. I suppose it's bio stocks. So they got some bad news somewhere. It's not popping up on my system, but clearly they got some bad news and gapping down with a major volume here. So let's go take a look at this stock chart. Let's see. So far in an hour and 17 minutes of trading, 1.6 million shares to the downside. Very nasty. It's at all-time lows for sure. So where's this thing going? Slowly or quickly going out of business out here. So here's the tail. Now this thing did trade up. Looks like it traded up somehow. Well, with 1,300 shares, so really we didn't trade up yet. Some market maker out there at $6.19. But this stock here looks like it is French toast out there. Now let's go take a look at the tail on the other side. That's going to be with Biogen. BIIB. I believe BIB is trying to take out its most recent highs. Let's go take a look at that stock chart. BIIB, again, is the ticker symbol, trading out at 177.62 out now. Now, here we go. So this is great because this also has a TD Combo 13 account out here that took place here on March the 15th. So this is great because you want to talk about if this does close over the highs. In Biogen, that high is 178.18, 2 million shares on March the 15th. So far in trading today, that's it, 180,000 shares. Let me refresh my screen here. Maybe I've got a bad data feed or something. I would have thought it had more volume than that in it. And it's not. So I was going to say if it was going to break out above this, but the way it's trading volume-wise, it is not certainly breaking out. And now, so here you got these another TD13. Again, when they break above these areas, really sets up a continuation. This is just nothing more than paint by numbers out here. Right now, though, you've got Biogen tackling that March 15th high, but doing it on much lighter volume. Watch now. This is not a short. I wouldn't short this per se, but 178.18 out there. You'd have to have a real sign of weakness inside this equity, and we haven't seen a sign of weakness. Really, when was the last time we saw a sign of weakness on this? I don't see a sign of weakness on Biogen. How about that? In fact, if this thing ever does pull back to its 200-day moving average, you'll probably want to be all over it. 877-927-6648. Dow's up 70. S&P is up almost 9 with you open.
Are Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 64 right now, and it is Wonderful Wednesday out here in the TFNN. Well, it's like Wonderful Wednesday in most places. And on Wonderful Wednesday, we got Basil Chapman. He's up next. Larry Pesavento from 12 to 1. Daryl Martin 1 to 2. David White 2 to 3. Ken Shreve will be the warm-up band for the Tom O'Brien Show from 3 to 4. And Tom will be with you from 4 to 6. And again, folks, go over to the homepage at TFNN.com and sign up for Bud Rolf's workshop. The coming 4 years in the market is being held again tomorrow night, 6:30 to 8 p.m. You will be so happy that you invested in yourself. Go feed your mind out there. Nothing like feeding the mind. Let's go take a look at at some of the sectors inside the S&P. Let's go see what some of the big sectors are doing out here. Let's start off with the energy sector. Energy sector yesterday showing some real weakness, forming a bearish engulfing candle out here. That's after it showed that it was a little tired after that little harami candle that came in on March the 15th out there. As the rest of the market, the Dow was making some highs out here. The XLE was taking a little time off. Right now, what you'd be watching for a serious break back below the trading range is that September 14th level. Didn't get back there yesterday, but watch for this. Put this one down on your pad of paper. Watch that 77.35 level. If it gets back inside there, this break topside may have, in fact, been a false breakout. So you got the bears out, with the markets up here, with the Dow up 70, the S&P up $8.76 right now. I can tell you the energy sector is saying, nah, not so fast here. So you got that. Now, where is resistance? Where's support on this level? Certainly that first level of support is going to be that September 14th high. That's why that 77.35 is important to watch. You get back below that, then that sends off moving down and testing the swing point from February 26th. And then after that, takes you all the way back to the December 31st time frame, January 2nd gap up. That's on the energy sector, the XLE. Let's just go take a quick look at ExxonMobil, XOM, see what ExxonMobil here is doing. You don't have ExxonMobil participating today whatsoever. ExxonMobil just simply consolidate. Now, ExxonMobil has not broken down either. It would do that when it comes back and it tests the January 2nd level. So it's trading into January 2nd right now. It says ExxonMobil wants to get back to the bottom of this range here, wants to come back to December 31st. And with its weighting structure inside, obviously, the energy sector, the XLE, and as well, one of the leaders inside the S&P, that should put a little bit of pressure on the S&P. Let's go check in on the financials. Earlier, we had Bill from Colorado Springs calling in the financials. He wanted to take a quick day trade on that. We use that relative strength indicator to keep him out of buying into that at the open and to look for a better sell or buy point. Right now, the energy sector, the XLF, as we take a look at it yesterday, also showed some weakness out here. Bearish engulfing candle. Last time we saw any bearish candles was all the way back here on February 20th. Now, that really is a level that's going to be its first level of support. What we also have out there inside the XLF, whoops, didn't mean to use that number. There we go. What we also have out there is that March 5th little gap up area. So really it's a low of 1787. That will be your first real test of a support level. And the XLF wants to get down there and test that. So the XLF not, gapping up from yesterday's close, but not really participating in the party. So have a great trading session, folks. Stay tuned for Basil Chapman. And remember, I want you to live life fully. I want you to experience everything. I want you to take care of yourself and your friends. Have fun. Be crazy. Be weird. Go out and screw up. You're going to anyway, so you might as well enjoy that process. Take the opportunity to learn from your mistakes. Find the cause. Spend 5 minutes on what that problem is. 95% on the solution. Don't try to be perfect. Just be an excellent example of being a great, extraordinary, fantastic, loving TFNN human being. Thanks a lot, folks. Have a great day.